We go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with switch markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. back to the trading room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. The week ahead. Today we're going to talk about the week ahead, maybe some things that may be headed our way in the near future as far as trading opportunities and potentially some ideas of how to attack the coming 5 days on the markets. We've also got a big key event developing Thursday with the ECB interest rate decision. We've also got an opportunity potentially to trade some gold. We're going to look at the FX majors today. We had an interesting number that came out of Canada earlier, Canadian inflation, and we've also got really a lot of things flaring up on the markets right now. Even though our volatility index is down a bit, you can see that we are definitely on the edge. It feels like on the edge of something big. So I do want to start off by saying welcome back to the trading room. Week 30. It's already week 30 of 2026. So be sure that if you have any questions, ask, and I will do my best to get right back to you. Let's get it going. All right, the MOU is over. Strikes resume. That was the big news over the weekend here in the United States. We've sort of been calling for a large-scale resumption of the Iran war for about 30 days. Really, the MOU, there was no secret that that was not going to hold. You can see it's off. It's completely off now. We're back to full war. The United States took some casualties over the weekend. Some of the videos coming out of the region are absolutely amazing. The United States launched some large-scale strikes, but the Iranian missile systems and drones, missiles especially, look like they're having more success hitting targets. U.S. targets have been hit throughout the region, and Iran has launched some major offensives that have been coming sort of, if you've been following this at all, you know that it just comes out of nowhere, and you see big time strikes all across the region of the Middle East, and then the United States typically will retaliate. But here's what we need to know right now, without going too much deeper into the analysis. Right now, the Strait of Hormuz is closed for business. Iran has put a ban on all vessels going through there, all commercial trade going through there. And what that's already done is it's put upward pressure on WTI crude oil. It hasn't affected stocks just yet. This is a very delicate situation. So as we roll forward here through this live stream, I'm going to cover that a little bit more with our prediction markets and see what we think. Sometimes as a trader, you fall back on your gut instincts and your spidey senses. And I can tell you right now that this thing's escalating. I expect the United States to escalate further and further throughout the rest of July and into August. We're going to see some stuff happen in that war that we haven't seen yet. And I think we're bracing. This really is the calm before the storm in the markets. There's no question about it. So we talk about U.S. oil. Typically, that's synonymous with what's going on in Iran. Right there, topside resistance, big-time level. Have it written down on your charts, 85.50. We had a trade idea in where we were looking to sell about 85.25, somewhere in that zone. Didn't quite get it. You can see today's high to open up the week. This is a weekly chart, but the daily high is about 84.60. So 85 is a big deal. I think we've got some real challenges ahead of us with the markets in general, and it really all does stem from U.S. oil. So if I'm trading U.S. oil today, I'm really looking at number one, topside resistance there. But to the downside, right now we're trading right around $82. That's a big-time support zone. If we were going to step up and look to buy this market, I think you probably would do fairly well bidding from right around where we're at now, about $82. Do we want to take this trade? Personally, I think it's high risk just because of the news cycle, but I'm not really against it. You can see the compression here. This area is topside resistance, theoretically 82, but we're very bullish. The heat has been on. We've hit this level all day long. I would bet that we break above that level and close. So if we wanted to take a high-risk trade right now, I'd be looking just to go buy market. Let's go ahead and buy market on U.S. oil and just let this one simmer. Let's let it run for a little bit. Now, this would be a really difficult trade to execute with a large leverage. Small leverage, you can do it because we're not really going to know where we have to get out of this. This is more of a time-based trade. Now, I can tell you what we want to do. We want to see price break up above 82, and then maybe we get a shot at like 82.50 is a real nice runner, maybe later in a session, maybe 82.60, maybe 82.75, something like that. That's very possible. It's very possible, but it's relatively optimistic right now. The market's very quiet. It's very dead. The reason why it's quiet and the reason why it's dead is because our news cycle is so active. So many questions coming out of the Middle East and not many answers. So I'm watching this one closely. We're going to go ahead and hold these position longs for right now. As far as getting out of this market, you probably just going to have to let this one twist a little while. I hate doing that, but this symmetry right in here, probably look to stop ourselves out down in here somewhere if we do trade off. But I really think the heat is sort of on this market. We're going to go ahead and go with just sort of a position long and see exactly what happens. May work and be a really great reward. It may not work. But this one right here, boy, if I was trading crude oil, I'd much rather be long than short. No question about it. Much rather be long than short. All right, everybody out in YouTube land, good to see you. Jason Max, it looks like we're dropping a few frames, so if I get fuzzy or the audio cuts out, I apologize ahead of time. But Jason Max, good to see you, Jay. Welcome back. Amal, hey, how you doing, Amal? Good to see you. Over in the How to Trade community, good to see you. Tuku, Ralph H., Bobby Bob, Andrea Garwell, good to see you, Andrea. Welcome. Let me see. Bobby Bob has a question. Hi, Coach. Welcome back. New week, new execution. Love the attitude, Bobby. Absolutely fantastic. Today, we look at the Great Britain pound, New Zealand dollar. Absolutely. I'll pull up the pound Kiwi, and we'll go ahead and give it a look. Amal, what about gold? That was my next stop, Amal. That was my next stop. I was going to dive right into gold because it's relatively important. Same trade we had on the on the board last week. The longer that gold trades right in front of last month's low, the greater confidence I have that we're going to see some real action. Here. I think that your breakout beneath last month's low is more than likely going to give us a real nice opportunity to get a runner down there to probably 3,700. Now, that's a big move. That's a $300 move. I don't really think you need to take that. We have a trade idea out that describes how to trade that gold. And you can see right there, we're looking for about 39.41-ish, somewhere down in that zone to sell. And then as far as our next level, 39, 31.75. That's about all I'm looking for. There's 1,000 pips, about a $10 move. However, there's a lot more there. And right now, what we see developing in the gold market is one of those that I talk about relentlessly. I mean, I drive people crazy talking about this stuff. And it is compression in front of a key level. If you know your key levels, you know how to trade. Key levels, previous days highs and lows, previous months highs and lows, previous weeks highs and lows, yearly highs and lows, big round numbers, all of it figures in. And what's really important about this level right here is it's June's low, June 30th low right there is established. We have traded the entirety of July thus far inside of that range. It feels to me like we're going to break and really run south. In my opinion, it's going to be sort of not the beginning of the end of gold. I think we're already seeing the bearish pressure on gold, but it is going to signal that we're heading to a next phase of the war. And the U.S. dollar has been the big winner during this war. It's holding firm right now, right around 101, the DXY. This is a big deal. This is a really big deal. So as the war gets worse, most people would say, okay, I want gold. I want gold as a safe haven. I want gold. And I'd say, yeah, not this time. Not this time. Gold was really highly inflated up here, right around 5,500. I still like it to return to 5,000. I just don't know when. But right this minute, if you do get a break and a runner under there, that could be a really good trade and one that I'm watching closely. You also remember, one last thing I'm going to say about this level. June's low. It's also the yearly low. It's the yearly low for 2025. This is a big deal down here. I think if we break beneath that level right there, you're probably looking towards 3,700 is being the next big support zone. So you definitely want to have your eye on that. So Amal, as far as intraday trading and all that jazz, I have just been hearing horror stories throughout this entire trading year. Short-term traders trading gold. In my humble opinion, in my view, when I look at something like that, that 4,000 level, it's the point of control. We just cannot seem to shake it. This is a really, really, really tight intraday pattern for gold. It really is. So that's sort of your high right there. That's sort of your low. I mean, it's just absolutely brutal. I would stay out of this. on an intraday basis. Wait for those long-term levels. Those are the ones that you're going to want to hit. If we don't get one trade this entire week, that trade right there would be a pretty good one. That's sell beneath last month's low. So definitely keep that in mind. Check in on our U.S. oil. U.S. oil sort of breaking against us here. A couple of decisions we could make. I mean, position trading is always difficult because we don't really know where we have to get out of the market at. We really don't. This trade right here, if I was going to put a stop loss on it, more than likely we would get hit, and then the market would rotate back up. I'm going to stay put. I'm going to hold. I'm going to hold for right now, even though it is going against us. 17 ticks, really quiet market. Maybe a great time just to pull the plug on it. One of the great things about trading crude oil with low leverage is that you just pull the plug on these trades. Would $180 loss or $190 loss really hurt you on a Monday? You know, if you have a tiny account, maybe. But if you're trading prop or you have a $5,000 account or a $10,000 account, taking a loss right there is not the end of the world. As far as what I'm going to do, I'm going to let it run. We're going to let it twist and see exactly how it goes, because right now the symmetry of this is absolutely terrible. It is not good. Here's your big sell-off early. There's your rally. So topside resistance. Essentially, we're playing potentially a break above topside resistance. Even though we're down to about 81.75, 72, it doesn't look really good. Still very possible. With the last probably hour, 20 minutes of premium crude oil trading today, I would be more inclined to let this one twist in the wind and see if we can get any left to the top side. If we don't, we don't. As far as where would I look to get out right now, we got to play it by ear. I don't want to put down a firm stop loss because even right in here, 8107, I mean, we could easily go down and then bounce up. That's how volatile this market is shown to be over the past 6 months. Let's go ahead and wait. Let's go ahead and wait. I hate doing it too, but let's just go ahead and wait and see how this one pans out. Really a difficult trade to take right now, but I think we're going to take it and we're going to manage it on the fly because it's important that we start getting in the zone with crude oil because we're going to be doing a lot of business with crude this week, and I can't wait. That's my specialty. All right, let me see you right here. Great Britain, pound, New Zealand dollar, Bobby Bob. Absolutely. Let's knock this one out. Then I'll get to some of your questions out there in YouTube land, and we will also cover some of the fundamentals of the day, and there are more than one of them, right? Okay, so 30-minute chart here. You can see we're just sort of creeping down. We're just sort of creeping. If I was definitely marking some levels here on short time frames, this liquidity sweep right here, definitely got to know where that low is. That low is right down there at about 229.34. So definitely be cognizant of that. That's absolutely huge. One thing, I made a short. I don't know when it's going to see the light of day, but I made a short on probably the greatest reversal pattern in all of trading, in all of active trading. And what is it? It's the hammer. It's the hammer. The hammer's pretty good. The hammer's been good to me. Over the years, the hammer has been good to me. That's a hammer. Nice elongated lower wick. You close that candle right up at the top. What does that mean? It means sellers stepped in. They drove the market down lower, but they couldn't win. They couldn't win the fight. You got the big bounce. The bidders stepped up to the plate, and now the bidders are in full control of this thing, at least over the last hour. So right now we're trading about 229.69. You know, what do we really say about it? Is it a great trade to go long right now? Nah, probably not. I mean, if you were going to go long, you probably wanted to go long right down there, 29.53. Still a modest move. Let's step back to our micros and see exactly where we're at with regards to potentially a trend play, something we could do. Okay, definitely understand where that level is. Very, very important. That low, that swing low, already sort of set up as downside support. You've also got a situation right here. What is this? It's a demand zone. Look at that right there. Boom. Bidders. Bidders have been there every time at that level. Be ready. If you're holding shorts, you're going to have to take that zone out before you get the big run to the downside. So for me, I'm going to back off to the weekly. Let's go ahead and have a look at the weekly. Okay, I love the market structure. First and foremost, I'm smiling. I'm a happy man right now because we've got good market structure to work with, and that really is all we can ask. Couple of things. Number one, last week's low. Once again, market. Know where that level is. That's potentially a very big deal. Spike low right there to a nice spike high. Spike low, spike high, 62% to the downside. So if we can take out that liquidity zone, this area where the bidders have been there relentlessly on the daily, if we trade beneath last week's low, we'll have an opportunity potentially to run to 62%, 228.60. I would much rather be a bidder from there. Give me a little better trade location. I would feel better about holding longs. Now, should we be thinking long side or short side? For me, if you wanted to scalp this one to the short, I probably would allow it just because you've got a couple of levels that we're going to look at right this minute. 2,300, big round number, 50% of this move. 29.90. Let's go to a daily. Do we have anything to hang our hat on here? Spike high, spike low. What do you got? Pretty good zone right there. So if I was going to be a net seller, I'm probably a seller right up in here, right up in this area somewhere, right between 23.16 and 23, somewhere right in there. This area, pretty good stuff for me. Other than that, you're probably looking at a break potentially beneath last week's low, and then maybe a little bit of a run down to that 62%. Probably would be a bidder from there. Tight market, though, Bobby, tight market. So if you're trading it, trade it well. Be cognizant of your entries and just stick with what you're doing. Stick with your risk management. Absolutely important we don't get away from the risk management. All right, let's see. We've got a couple of questions here, a couple of comments. Alec, hi, Shane. I hope you had a good weekend. I had a great weekend, Alec. A lot of work. I had to do a lot of work around the house and things, but managed to sneak off to the gym, and it was really hot here over the weekend, so managed to put down a few cold ones as well and kick my feet up for a few hours at least. But the news cycle really was dominating a lot of my attention. I wasn't sure what we were going to get on today's open, but we've got fairly orderly markets, and that's good for us. Let me see. Fitness motion picture. All right, all right, let's go for it here. I'm going to read it. Doesn't look happy though, but let's do it. Account blown. It hurts most because it was a loss I could have avoided. I'm emotionally drained and trying to find my way back. Can anyone recommend a reliable prop firm? Opportunities are tough. For my line of work, I don't recommend prop firms. There's a lot of them out there, though. If some of the other traders in the room want to help fitness, get a prop going, go ahead and do it. Just remember fitness, blowing an account out, it's sort of a rite of passage in this business. I've blown accounts out. I always feel the same way afterwards. Terrible. You know, it's sort of like placing a big bet and losing it. You feel bad about it. So all I can say is take some time off. The first thing I would do, and I recommend this to everybody, if you blow your account out, slow down. Slow down. Pace is not your friend. Slow down. And if you slow down a little bit, take some time. Take a week off. Take a few days off. Come back when you're ready to trade and you genuinely want to trade. That's what I would say. Take some time, though. Slow down. As far as prop accounts go, there's a million of them out there now. I've been looking around those lately and just going, wow, man, this industry has definitely changed since I was a kid. So all you can do is what you can do. Do the best you can with it, but take your time. Take your time. Let me see. Enzo the Picker. Good to see you, Enzo. Welcome. Shane, do you trade these new futures prop firms with combines, etc., or your own private capital? The majority of what I like to do is with my own money. However, I've been involved with a lot of prop firms, some of the futures prop firms here in the States that are really cheap. You probably know the ones that I'm talking about. They're always running specials, and everything's cheap. I use those typically to try new approaches. If I'm trading for real money and scalping and placing trades that I have a lot of confidence in, real money for me. I don't want to split it with anybody. I don't want any guidelines. So to answer your question, I think prop's a great way to trade. I really do. Get in there. Anybody that's going to give you money to trade or wants to bet against you on a demo, take the challenge and do it. Absolutely. I don't have a problem with that. I think it's a good way to get some good liquidity and good experience. Me personally, I use it for a few very specific things. When they're really cheap, I just take shots at them, see how fast I can pass a combine or put on some position trades similar to what we're doing in U.S. oil. Work on my game, work on my psychological game with their money. That's something I'll do, but I don't do much of it anymore, Enzo, to be honest with you. Let me see Lebo. Good to see you, Lebo. Welcome. All right, fitness. Hope all that helps. Let me see David. Hello from Africa. Good to see you, David. Welcome. I'm sure everybody's doing well. Let me see it. Ralph H. Let's see. Prop firm match is a good place to start. You can compare and read reviews. Yeah, that's absolutely a great resource right there. Check that one out, fitness. Prop firm match. So they got a little message board or somewhere where somebody does research for you. Fantastic. All right, let's go ahead and get on with the show here. We've got another NASDAQ. I want to look at some NASDAQ NQs, NASDAQ 100s today. You can see we got a key level coming up here that's on that long-term support zone right around 27.8. 25 is what we're looking for here. I think this number could definitely come into play this week. We're looking at 28,772s right now. NQ, NASDAQ is going to be right there, right around 38%. We want to shade and get in just a little bit above that, so somewhere right up around 27.825. Watching that closely down there, I think that's a great opportunity for us to get on the board, maybe get a little bit of love there, maybe get some make a little bit of money off a key level later this week. That's what I'm looking to do. That's what Mondays are all about for me, is game planning. So you can see right there's a trade idea we wrote up a few days ago, 27.825 long-term support zone. I would have that definitely on my big board for this week. As far as today's trade, actually, well, you can see the NASDAQ started off really on the nice foot, but we've given back a lot of those opening gains. And you see this spike high right there to this spike low, and sort of there's your pullback zone right in there, and we're coming off just a little bit. So bullish or bearish for the rest of the day? I don't really know. Very, very tight. You're inside of Friday's range. Not much is really going on here to start the week. Everybody's on pins and needles with the Iran war. We're waiting to see exactly what potentially could happen here. This is a NAS 100 CFD. I think if you wanted to sell right up there late in the day, 28,850 or 28,846, somewhere in there, you probably could get away with it. But just remember to be conservative and scalp, as opposed to looking to take huge chunks of money on a Monday. I would really avoid that. I start off on the good foot. So if we're looking at the NQ futures, this is NASDAQ, E-mini NASDAQ futures. If you're watching YouTube these days, pretty much all of your financial people, all your trading influencers or whatever they call themselves, are trading the NASDAQ, the NQ, and the reason why is volatility. I don't recommend really novice traders trading this. Really just a raucous market. I mean, this thing jumps around. And a lot of that has to do with limited liquidity. There's not as many futures contracts being traded. But still for today, we've got 368,000 contracts have changed hands. That's solid liquidity. It's not bad for the NASDAQ. It really isn't bad. But like in comparison to maybe the E-mini S&P 500 futures where we've traded almost 900,000. You can see that this market is a lot smaller. So what would we be looking to do to trade this one potentially rolling into later in the day? Well, let's go ahead and see. We know we've got 29,031. Somewhere in that zone is sort of our daily. Let's go to our 30-minute Fibonacci, or excuse me, our 30-minute market profile. Okay, you can see where the fight has really begun. I mean, that is where you are fighting resistance right there. Can't seem to become established up over that level. So what can we look to do to trade this thing? TPO charts really become a good friend of ours, a really good friend of ours over the past several weeks. The reason why is we're in slow summertime trading. This is what we call the summer doldrums. And when you're in the doldrums, it's important not to lose money on choppy markets. A lot of professional traders would look at that U.S. oil trade I made today and would say, that is absolutely embarrassing to take that trade. And I'd say, yeah, but it's a really slow market. And we know that the fundamentals are all pointed up, so we can actually hold a position there for a while and potentially get paid a little bit of money without having to take a huge amount of risk. That's why we made the trade. So how's this trade different? Well, you've got NQ coming. You've got the TPO chart right there. Look at our point of control. Our point of control right there at 29,038 lines up beautifully within about 5 points, which for the E-mini NASDAQ is not that much. So when you're looking at the point of control for the U.S. session, that's the area we've done the business. No coincidence. We've got that daily Fibonacci level that's present right there. For me, I mean, I've seen enough. I would be looking to go sell limit order somewhere right in that zone. 2 contracts is legit. That's a lot. 2 contracts will put you on the hook for pretty big moves. However, you could certainly trade 2 contracts, especially if you're running a prop account. So we're going to go ahead and let this one twist too. We're looking at 29,035 right now. We're printing right around 28,972. So we're about 50 points north of where we're at right now, which for the NASDAQ is not much. Not much at all. So what I would be looking to do right there is see if we can get on a positive side of the ledger, maybe make a nice trade with a nice sell, a little bit of topside resistance right at that point of control and that Fibonacci level. This time of day, it's a pretty good one. It's a pretty good one. That's for sure. Let me see. David Wright, Argentina love from Africa. Right on. Right on. Let me see. Do you do giveaways, bro? Not so much anymore. We're talking about maybe getting a contest going for a little bit later this year, a big contest. But we'll see. We'll definitely see what happens here. Let me see. Lebo. Good to see you, Lebo. Hi, Shane. Happy to be back. Haven't been here in a couple of weeks. That's okay. It's summertime. You guys need to take some time away from the markets. There's nothing wrong with that. Nothing wrong with that at all. David Wright. I've been trading for 7 years, but no profit. Well, I mean, 7 years and no profit. You know, sometimes if you love to trade and you enjoy the process and you want to stick with it, there's absolutely nothing wrong with sticking in there and trading if you're not making any money. If you want to learn and you want to get it done. What I'm saying is if you're zero profit or you're losing a lot of money. Because if you're losing a lot of money, that's a different thing. That's a different thing. That means that you probably need to think about maybe stepping back from the markets or potentially adjusting your strategy and your approach. My guess is 7 years. More than likely, you've probably used a lot of strategies and a lot of approaches. That's a long time. 7 years is a long time. So if you've been in it that long, there's an underlying reason why you haven't made the profits. There's a reason, and you've got to find it. You've got to turn over every rock in your psychology. You've got to turn over every rock you can to try to figure out what the problem is. Maybe the problem is you're getting bad fills for 7 years. Maybe the problem is your strategies. You're too inconsistent with your strategies. Maybe you overtrade. Maybe you have a problem ripping off the Band-Aid and taking a loss. That's okay. All those things are okay, but you've got to get to the point where you understand what's happening to you and why you continually lose money, or at least give back the profits that you made. Before you place another trade, that's what I would recommend. Sit down and have an honest conversation with yourself. 7 years, you've got hundreds and hundreds and hundreds of trades to look at. Sit down and be honest. That's about all I can say is you just got to look in the mirror and go, man, what do I want to do? Do I want to keep doing this or not? And if you don't, hey, listen, there's no shame in walking away from the markets. There's no shame in it. I've taken breaks before where I just go, you know what? I got to sit down and try to figure out what's going on between my ears. But I always come back because this is what I do. Maybe for you, maybe you're thinking, you know, I want to go do something else with my time. There's nothing wrong with that, David. Nothing wrong with that at all. Let me see them all. I'm using Switch Markets. Well, welcome to the Switch family, that's for sure. David Wright, in my country, we're only allowed to trade synthetics. Well, I mean, that could be a challenge too. you may just be in a situation where the synthetics are hurting your profitability. That could definitely be. Babji, sup Shane? You guys can have your beer back now that the World Cup is over. You guys drank it all. That's some good stuff. The Scottish folks came. They showed up to Boston and drank them out of Sam Adams. That still makes me laugh. So congratulations to Spain. I didn't watch the match. I'm sure most of you did. But it was viewed by 1.5 billion people. So it was one of the biggest. I think it was the biggest sporting event ever. So congratulations to Spain. I have a feeling that most everybody bet on Messi from Argentina. I'm pretty sure that everybody took them. But you can't argue with defense. Defense always wins in those big games. I don't care if it's soccer. I don't care if it's football, basketball, baseball. Baseball, it's about pitching. But the other team games, defense always wins, especially in the big ones, big games. Let me see. Lebo, a financial market that I really enjoy trading as a swing trader is the QQQ and SPY. Those two are consistent in whatever direction they move in. Let me see, David. Yeah, I'm losing, bro, but I make a little and believe I'm getting better. Then stick in there. Stick with it. I'm here because I've hoped that one day I'll make it. I can't argue with dedication. You've got the dedication. Stick with it. Keep chopping. Keep moving forward. That's really all you can say at this point. Keep doing it. If you want to keep doing it, keep doing it. All right, let's check into our crude oil stew. Really starting to like what I see here. You can see the pressure's on that top side resistance. So one of the things I love about this trade is that we don't have to risk very much. And one of the things I hate about this trade is we are just knocking up against that top side resistance zone. So we're almost betting that it's going to give way. Well, if it does give way, we know that we're going to take price for a walk up there, and we're going to have a real chance to make a little bit of money. But if it doesn't give way, then we're just sort of stuck with it. Very challenging trade to take. I don't think it's a bad trade. You can see we're back to break even. I don't believe it's a bad trade, but that's a challenging trade to take, definitely. All right, let's go back to NQ. I would love to see this one trend a little bit higher and get us into that before we sign off for the day. That would be a lot of fun. All right, E-mini S&P 500. Futures contracts, this would be similar to your S&P 500, your US 500, SPX, SPY. It won't be SPY. That's what is that, the ETF? You don't need to worry about that, but still very, very similar price action, just absolutely tight, just tight as hell in there. And you've got a point of control right up there in that zone, right around 75.21, about 18 points higher. I mean, I wouldn't hesitate to sell that one. The bottom of value, do we want to take the bottom of value? This has been a type of trade that we've taken several times in the past several sessions. Is this something that we want to get involved with? I kind of like it. 2 contracts, we'll go right there, right above the bottom of our value area today. And that's going to be our buy. So there's our buy limit order sitting right around 74.98. And the bottom of our value, bottom of our value is right there. It's about 74.9750. So I don't hate the trade. I think that more than likely what we should be doing is looking to bid, probably bidding 7,500s. It's no coincidence that the bottom of your value area is 7,500. Do you remember Friday's trade? Essentially the same thing, right around 7,500. Pretty good area, though. Pretty good trade. Let's go ahead and bring this down just a little bit. I want to go right on the bottom of that value area. So let's go right there, 97.75. We're not going to look to take very much profit on this. We're only looking for a few ticks. Our psychology to begin the week has to be to get into the green. So let's get into the green and see what we can do. So we've got a couple of trades out there. We're holding U.S. oil longs. That one's going against us yet again. NQ here, if we get a good pullback there, we've got a shot on that futures, and then also E-mini S&P 500, buying the bottom of value. Very conservative for a Monday. I'm always conservative for a Monday, that's for sure. Let me see. Uncle Chimax, take profit for U.S. oil. I mean, I would be looking for at least 82 and a quarter. At least 82 and a quarter, maybe 82.50. Because the idea is that if you break above 82, we're going to run a little bit. You can see WTI crude is just absolutely flat today. That's sort of why we took the trade. We think we're going to break and run to the top side. That was sort of my guess. But right now we're still getting our lunch eaten a little bit, 81.76, 81.75s. And we were just trading 90s. So you definitely want to be ready for that. If in fact that is to develop. All right, let's get back over to NQ. We just clicked over to the half hour. Let's see what's happening here. Okay, this right here, I do like it. This kind of price action. If we could run from here on this 30-minute bar, I would have a lot of confidence. I would have a lot of confidence in this scalp. The question is do we get it? And, it's one thing to have a great trade location. It's another thing to be able to get the price. So these are the prices we're looking at. You see right there, boom, boom. We got an opportunity potentially to trade one of those. U.S. oil getting a little bit of a rally on that 30-minute open. I think this is make or break time for us in this trade. Right here, you've got just an ugly price action, very, very tight inside bar, non-committal area. We're trading between our Bollinger midpoint and our 13-period EMA. Really difficult. It feels like a breakout's coming, though. It really does. So my stop-loss location, I still don't want to throw down the stop-loss. And the reason why is a lot of traders would take that stop-loss right beneath the previous bar, right in there. Not interested in that. I'm not interested in that. We could easily trade down, knock them out, and then reverse and run. Probably going to be in this trade another hour, it looks like to me, unless things get ugly for us and we just have to cut fish or cut bait, just cut it off and leave. But the pressure is definitely on that 81.91 level, that 81.95, 82 level. The pressure is definitely on that. We're going to keep watching it. I don't love it, but we could potentially break out above that zone right there and really set ourselves up into the close with a nice trade. However, we're getting our butts kicked right now. So let's go ahead and just wait and see what happens. I don't love it. I don't love it yet. But realistically, if you were looking for a profit target, a legitimate profit target by the end of the day, probably something like that. Something like that's not horrible. It's not a bad aspiration. So you can see, right, I mean, we should hit that 82.23, but we've got to break 82 first. And right now, I mean, those sellers are dug in there like an Alabama tick, to quote the old Predator movie. I mean, they are just dug in, and it's war right there. So we'll see if we win. I don't want this trade to get too ugly, though. So if it does break against us and it's starting to look pretty dire, then we'll cut it off. We just got to wait and see what happens. It's dynamic trade management, guys. We'll do the best that we can with it. So that's what I would have for that, Uncle Chimax. Let me see. Lebo, I have a question. Let me see. David Wright, I once took a trade with $20 and made $5,000 by mistake because I had entered and I had no data for about 3 months, and the trade ran from 20 to 5,000. Good Lord. Fantastic trade. Absolutely fantastic trade. Man, don't you wish you would have had like $500 on it and just let it run? That's good stuff. I wonder what your swap fees are on that for 3 months. All right, Lebo, I have a question if I may. I've heard that a swing trade is anywhere between 1 day and 90 days. Any trade that is held longer than 90 days becomes a position trade. Anyway, your thoughts on this? Yeah, I mean, personally, I call this an intraday position, what we're involved in with the U.S. oil market right now. So, you can use these terms in many different ways. For me, that's not bad for a swing trade. I think 90 days is a little bit long for a swing trade. If I'm swing trading, I'm thinking like 2 weeks. That's what I'm thinking, maybe 3 weeks. People say up to 6 weeks. So if you're looking at 6 weeks, that's still only like 42 days, including weekends. So I think 90 days is a little bit long, in my opinion. But hey, listen, define it however you want. Remember, this is all theory. I mean, these words and this verbiage and liquidity sweeps and fair value gaps and yada, 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 all this stuff is just theory, and then it's the nomenclature of the business. So when you talk about a position trade, I would say right now I have a long position in crude oil. Anything over 90 days, I would consider an intermediate term investment. That's what I would call it. So, that's just me, though. I mean, everybody talks different. Everybody speaks a different language, seemingly, these days. You define it however you want. Just stick to your definitions. To me, 90 days is way too long for a swing trade. Way too long. I think probably my maximum would be 3 weeks. It would be about a third of that tops. That's what I would be thinking. So those are my thoughts on that, Lebo. I'm not real big on that. Let me see. When is summer ending? Babjeez, into Labor Day. After Labor Day, so the first, the first weekend in September, I would call summer dead, and then we'll be ready to get into fall trade directly. That's for sure. That's for sure. All right, let me see. What is your strategy called, or define it in a sentence? Fibonacci counterpunch. I wait for the market to move, and then we punch it. Retracements, Fibonacci retracements. Okay, here we go. Okay, now let's take this baseline for a walk right now. Now, there's our break. Now, mentally, there's our break. So what are we thinking now? We're very, very reasonable about what we're looking for out of a profit target. But there's our breakout, right? Now we're up to 82.05, 82.04. We really haven't done much yet. We got a few bucks in the pocket, though. So for a Monday session, do we take the money right now? I mean, we took about a $200 draw. 190 was about as bad as it got, right down to about 72. So theoretically, we've almost 1-to-1 to this trade. Do we want to stick around looking for 23? I mean, there's our bump to 10. I mean, life's starting to look pretty good for us. Monday session, though. What's Monday psychology? Get off on the right foot. If I'm a Monday trader right now and I'm up $140, $150 on this trade, There's a couple of things that I cannot do, that I cannot allow to happen. Number one, I cannot now take a loss on this trade. You cannot do it. You can't do it. If you take a loss on this trade, you're setting yourself up for real failure down the line. This hole could get very deep. Okay, we're up 200. We're up $200 right now, right up around 82.13. I'm out. I'm going to take the money. I'm going to start off with a good, solid Monday session. All right? We had a nice trade right there. Now the market runs to 15. I genuinely don't care. Our initial target was somewhere right up around 23. If this is your first trade of the week and you don't have any money in the bank, that's not a bad place to just take your 200. We took our 200. Now, are you still in great shape to hit your 82.23? Hell yes. You're in great shape. You got a great opportunity here to hit your profit target. No question about it. It wasn't worth it for me to stay in there, though. Well, it was going to be about another $120, and you're going to hit it. So the question becomes, did we do the right thing? 6 of one, half a dozen of the other, guys. Many, many, many professional traders will sit there and go, you just sabotage yourself. You can't trade long-term like that. And what I would say is I've been here for 15 years. 200, I got 200, put it in my pocket. Not bad on a Monday. Does that? Okay, it's going to go up and get our points. That's fine. Does that impact what I'm doing in these other trades? It took the pressure off. Really took the pressure off. So if I was going to trade this pullback maybe later today in the NASDAQ, what should I be looking for in my take profit? Could I take a shot at maybe a bigger trade? Of course. Of course I could. What would I still be looking to do, though? Probably be looking just to get in for a nice little scalp. You hit a few of these scalps, all of a sudden you're up about $500, $600 for a Monday. Life's pretty good. Let's get back on over to our E-mini S&P 500 futures. Let's go right here, the bottom of value here. Nice bottom of value area. We've got a buy limit order. We're rocking 2 lots. So that's about $25 a point. A significant amount. Might take profit here. Let's go ahead and take a shot. Let's take a shot somewhere right in that zone. Let's go right there for about 175. A cool 175. So we make another one of these trades today. Then we start off from just a decent Monday to a damn fine Monday. And that's exactly what we want to do, guys. We want to start off every trading week that we can on the right foot. And if we do that, we know we're going to be successful over the long haul. All right, let's go ahead and let those twist. Let's go over here to our switch markets. MT5. We've got our MT5 platform here on Switch. Our Dell short. I'm really liking our Dell short. I would be surprised if we don't get this big sell-off this week. Fill in our gap trade. I saw that gap in Dell, and I was really, really happy with that formation. We're shooting somewhere down in here. There's sort of our profit target. I don't know, somewhere right around 43, 30, 34. Let's see. Yeah, 343, something like that. Pretty good play for our Dell. Pretty good play for our Dell trade. I think we have a real chance to get that one, too, a little bit later in the week. EURUSD daily. EURUSD daily. This is a 9 EMA trading strategy. Remember, we get the buy signal once we cross underneath that that RSI, which is down there right around 30, and then we get a bullish close above that 9 EMA within 7 bars. That's going to give us a chance to take a buy signal. So that signal occurred when? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days ago. Is it worth taking still? I probably, this is one of those that you could certainly do. I like aggressive. This would be an old signal, though. It's not a new signal. That probably would be what I would do. Stop loss there, profit target right up in here, and see if we can just make a few bucks. Something like that. Maybe bring it right down to a 1-to-1. Should be able to get a chance at that. Is that a lower probability trade? Yeah. The validity of this signal, I'm not really sure that that's even still remotely relevant to what we're trying to get accomplished with this trade. So if you were sort of bullish on the EURUSD this week, that would be because of the ECB. Maybe they're hawkish on Thursday. That could give us a good chance potentially to get in there and make some plays. But other than that, I'm not really too certain about taking trades on a signal like that 9 EMA signal 2 weeks down the road. I don't know about that, but we do have a couple of things going for us. Number one, we have our entry. Normal entry would have been here. We got a bit of a discounted entry. We also know where we have to get out at. I would put it right there. I really would. You could drag it maybe a little bit lower, right to that swing low there if you wanted to risk a little bit more. But honestly, this area right here, once this goes or this gets taken out, you're probably going to see a big sell-off there in the EURUSD. So I would be very careful there. I would not necessarily place that trade, but we'll go ahead and put it down and see what happens. Sort of a challenge there. Okay, here comes our buy limit order coming right to us here in the E-mini S&P 500. Let me see. Let me go. David Wright, a winning day is a winning day. Don't make it a losing day. Absolutely. I keep on hearing this thing about IPO trading. I don't know what that is. I was wondering if you could shed some light on this. Yeah, Lebo, an IPO trading is basically when you get an initial public offering. All right, this is coming our way right now. Let's go ahead and execute this trade. Let's take this right down to a 1-minute chart. And what we're looking to have happen here is to break 7,500, which is sort of our key level right here. We're looking to break 7,500 and potentially get our bid. We want our bid, we want in, we want out. If the life gets ugly down here, then we're going to go ahead and exit. Now, we've executed these lower value area trades several times in the last several days. They are tough. They are problematic. You've got to get really good fills, and that can be difficult when the market is as dead as it is today. It's really dead in there. Not much going on here. So we want to make sure we're not on the wrong side of a breakout. I think we're going to do pretty well on this trade, though. I'm optimistic. Okay, so there's our break. There's the bearish break. Now we're having a fight right here at 7,500. Now this is absolutely key. What's the 1-minute low? The 1-minute low here is what? 7,500. Those are the bidders right up in front of that key zone. Okay, we called that going into the trade. We knew 7,500 was a big deal. Now we're looking to wash out some of those longs. Let's wash this thing out, and let's see if we can buy and maybe get in on a quick rebound right back up to 7,500 and pay ourselves for our time. That's the basic game plan of this trade, but you can see there's the bidders there protecting 7,500. That's absolutely key. All right, we're going to circle back around to that. I think we're going to get that trade here in just another minute or two. To answer your question, let's see, to answer your question here, IPO trading, Lebo, what that is an initial public offering. That was SpaceX. They went initial public offering on the 12th of June, saw the massive run-up, and since then it's just been all over. I mean, it's just been really brutal trading. For those bulls that are holding SPCX. So be very, very careful here with what you're looking to do with something like an SPCX, but this is IPO trading. Typically, you're talking about trading its stock on its first public offering, which you can see SpaceX was the biggest one of all time. Nice big rally, and now the market's absolutely just sort of crashing down to earth. We'll talk more about SpaceX as the week progresses. We have a tentative missile launch for Thursday, which could be a lot of fun. Last week, SpaceX scrubbed their missile launch, and you can see that they did not get the big bullish bump they were expecting off a successful Starship 13 or something like that. One of those types of details. Let's get back on over to NQ, see what we're doing here. We're not going to get this trade today. That's too bad, but we had an opportunity potentially up there to get it. I'll let it sit there, but we're not going to get that anytime soon. U.S. stocks coming off just a little bit, and that's more than likely because our crude oil jumped back up over 82. Interesting stuff. All right, let me see. We got some fundamentals. I'm going to keep one close eye on this, and we will execute the S&P 500 trade live when it comes our way. I think it's coming right now, so I hate to sort of flip over to our fundies, but we may, in fact, be doing it. All right, I'll let that sit for a second here. That's IPO trading, Lebo. Babgees, I've realized that taking small wins consistently beats taking huge profits periodically. Absolutely. I've been preaching that for 5 years on this channel. Take small wins. There's absolutely nothing wrong with taking small wins. You can make a lot of money going either way. I've always liked taking smaller wins instead of giving too much back to the market. I always like to have a really high success rate, and that typically keeps your equity curve going like this, as opposed to waiting for those 10x trades where you take a bunch of losses and then you need that one big win just to get even. I don't like that. That's not my style. But if it's yours, get in there and get it. All right, now you can see there's a heck of a fight going on right here at about 75. What is this low? This low right here is 74.99 and a quarter. I think we have a chance here. I think we have a chance potentially to get our little scalp. Now, here's the thing. We're not going to mess around here. Now, we're up about 200 from that U.S. oil trade. That's what we took off of that one. What we're looking for here is just a nice solid in and out. I would love to get another 175, something like that. If we could get maybe even a 150 or a 125, it really makes for a great trading day. And that essentially is what we need to be doing day in and day out, is just trading to the green, putting points on the board and letting them add up over time. That's your advantage over the institutional traders that say, I mean, the institutions, the folks at Goldman and Sachs, the folks at JP Morgan are sitting there going, is 75 the bottom of this thing? Should we bet 100 million that 75 is going to be the intermediate term bottom? That's their problem. Let them do it. What we want to know is, Can we get into a nice zone here where we got enough bidders to push this thing higher and give us an opportunity to succeed? That's the only question we want. We don't care if 7,500 is the bottom. We're not trying to pick bottoms. We're trying to get in there where the liquidity's hot, the price action's active, and we can reach in and take the money out. That's it. That's all we're trying to do. So let's see if this one develops here. All right, we're going to give that a minute. I'll be watching that one. If it goes live, we'll click back over. All right, week 30, 2026. T-bill auctions were the big thing for today. Not much happened. We'll go over them in just a second. Tuesday is going to be the ADP employment change. Once again, not a huge level, not a huge number. We just got to wait and see how that one shakes out. And then you got Wednesday, UK CPI, EIA inventories. That's one of those that, once again, pretty slow news week, to be honest with you. Relatively good price action, I expect, but I don't know that it's going to be a big. Let me see. Thursday, ECB interest rate decision. The ECB interest rate decision is going to be probably the big-time red letter event of the week. So what you're going to see is probably some action in those euro pairs, those EURUSD pairs, something like that. We're going to be looking at that here in just a second as well. And then what else do you have? You've got Friday new home sales and S&P Global PMIs. So those, not a big news week. Really not a big news week today. The news of the day was your 3 and 6 month T-bill auctions. You can see that yields actually came down a little bit week over week, which is a bit of a surprise, seeing as how the U.S. dollar is sort of holding firm. We did come down, though, 37.30. You've got 37.60. You've got 6 month T-bill auction, 38.35, which is also down from the 38.60 last week. So all in all, guys, not really a big showing here for T-bill yields. Yields are down a little bit. The bonds market's taking a bit of a hit, and that suggests potentially that folks aren't rushing into those safe havens like they did last week. Let's just wait and see. I think that's a really strange read, and one that I'm definitely a bit concerned about as we start out the week. We may see some major volatility in the USD coming probably tomorrow and the next day, just based on those yields. In any case, we do have some action here in the Canadian dollar, or the U.S. dollar, Canadian dollar. Interesting zones that we have available. The CPI number didn't really drive us to the levels that we wanted to be driven to. It really didn't. You can see right there, month over month, down 0.4%. It's a good print, and it suggests that inflation is coming down for June. But what happened in June? Energy came back down. So I'm not, like I said, these CPI figures don't mean a whole heck of a lot to me. As far as the dollar CAD goes, you can see that they did mean something to the dollar CAD today. U.S. dollar sort of up as oil is holding firm right around $82. So as we move forward and you're trading something like the loonie, you need to be cognizant of what's happening with the oil market always. But today, that CPI number did drive some bidders to the dollar CAD, thinking that, hey, we're not going to maybe get any rate hikes in Canada. You can see inflation is down big, 0.4% month over month. That looks good. I still believe it's related to the pullback in energy, though, so we're going to go ahead and reserve judgment. But it has brought bidders to the loonie today of about plus 0.25%. Now, this pullback zone right in here is one that's fantastic. It's 139.80, sort of a longer-term level that we were looking at. I believe it's the same level. Really like the market structure here. Really like it. What you got there is a spike low and sort of a triple top up there. Fantastic stuff. I mean, you could almost call this an evening star on the weekly. Nice big rally, inside bar, and then a sell-off. Not too bad there. Not too bad. Nice reversal, right? An evening star. It's not the best kind of evening star, but it's not a bad one. Weekly chart, definitely worth noting. But you can see right there the pullback zone. For me, very, very simple on the dollar CAD. Very simple. This is a fantastic area that I would be hyper interested in if I'm trading the dollar CAD this week. You got 38% on that weekly is 139.79, and then also that 13-period EMA is 139.88. Definitely be looking at that. That's key. This area right down there is key. What does all of it mean? Probably that 140 area. What's the weekly low? 140.03, and the bidders stepped in and defended it thus far. Be ready, especially if we sell off and test that a bit later on the week, maybe Wednesday-ish with those EIA crude oil inventory numbers. Once again, it's all about Iran war right now, and WTI crude catching bids up over 82. We're about 82.20, so typically that's going to be good for the Canadian dollar. Hasn't really helped it today. We'll wait and see. We'll wait and see exactly how this develops. That's for sure. Big time level right there, though, on the dollar CAD. Let's get back over to our E-mini. You can see that the market just sort of got away from us. Should we have bid 7,500s? Maybe shoulda, woulda, coulda. You know, like I always say, if we would have known 7,500 was the sort of the pick to click today, then we probably could have just bought the lottery tickets tonight and known the numbers. So that's tough. Yahi or Jai. Well, either way, good to see you. Welcome to the room. David Wright, it's 2 a.m., bro. I'm going to be going to sleep now. Absolutely. Come on back later this week. You guys get your sleep in. We're available 24/7, 365 on demand, either on our YouTube channel over at Switch Markets, or you can catch us in the How to Trade trading room as well. All right, let's see. We got a question from the How to Trade community over here. Ralph H. Shane, if you are in a day or a swing trade and price starts to consolidate, do you stay in the trade? It's a really good question, Ralph. And it really is sort of falls into the what do I do when I'm in a trade category, trade psychology, trade management. You can see right here, the market consolidated after we entered the trade in crude oil, and the market really tightened up. So the question is do we just get out there or do we let it go? What I would recommend is if it consolidates and you have a firm stop loss level, you know where you have to get out if it breaks against you, then I would just let it go, because you don't really know when the action is going to come in that drives the market. You really don't know that. So I would say hold them. But I've worked with people. I had partners in the past that said, you know what, if this thing does nothing right away, I get out. And I think if you're scalping and you're only looking for a few ticks and nothing happens, you're betting on that instant liquidity, but positive, decisive price action. Yeah, you probably just cut those off. You probably exit and just come back later and look to get into the market when it's more advantageous or maybe there's more liquidity. But if you're making like a slow trade, like you said, if you're in a day or a swing trade and the price starts to consolidate, do you stay in the trade? I think if you're in a swing trade, I think you let it go. I think you let the trade go, especially maybe you're operating from a break even, or maybe you're operating potentially like a 1 to 2 or a 1 to 3, like a swing trade, and you know exactly where you have to get out. That may be a great opportunity to let it run. That's what I would say. If you know where your stop loss needs to be and the market dries up, say in a swing trade, you probably let it run. Let's see. It's pronounced like Jay. Gotcha. Jay. Welcome, Jay. I don't recognize the name, so if you're brand new to the room, welcome. If you have any questions, be sure to ask. All right, so that's sort of the action there. WTI crude, really a nice trade. Are we magic or psychic? No, not really. We're just on the right side of the fundamentals there, and the beauty of this market being as tight as it was is you have an opportunity there potentially to take a very small loss and get a decent risk. We cut this one off 200. Should have paid you 340. And that's worth it. That's really worth it. That kind of trading can keep you alive when times get tough. All right, our E-mini S&P 500 trade is out of here. We missed it. Our entry point was right there. The bidder stepped up and defended 7,500 with a vengeance, and now the market's moving higher, so we missed that one. This one right here may come our way, may spin our way pretty well. This NASDAQ, E-mini NASDAQ trade up there at the point of control. I would definitely be looking to make this trade. I think it's a pretty darn good one. Should we get this type of pop right here? Absolutely. Absolutely. You should get that pop relatively simply. Let's bring our entry point down just a little bit and maybe extend that a little bit. Remember, when we're talking about the E-mini NASDAQ, the NQ futures, or even your US Tech CFDs or whatever you want to call them, whatever you're trading, CFDs, futures, whatever, NASDAQ 100, anything based on the NASDAQ 100 is going to be volatile. So this trade right here potentially could come into play, and I think if it does, it's going to treat us very well. It's just a sell from your point of control up there in the intersection of that in your Fibonacci retracement sequence from a daily, I believe. Let me see. Trade should be around 30 minutes. Yeah. I don't know. 30 minutes is a long time for me. A lot of these scalp trades, I'm in and out in about a minute, 2 minutes, 3 minutes. That's for sure. I'm using your 3MA strategy, and it's kind of good, but not actually. Yeah, I mean, that's the 3MA strategy, EMA or not EMA. The 3MA strategy is pretty good. We're going to talk about the 5813 later this week. I can't remember where I have that scheduled for. Yeah, that's going to be Wednesday, the 5813 EMA strategy, nice little workshop. A lot of success with the 5813, especially scalping. So if you're interested in maybe fine-tuning some of your approaches there using that type of strategy, be sure to tune in there Wednesday. That could be a pretty good one for you. That's for sure. All right, guys. It looks like we're out of luck for right this minute. Not really too much on the fundamental outlook. This right here, I thought we had a real good chance to get this this E-mini S&P 500. Just didn't quite get it. All right, let's go ahead and go over to the dollar yen. Dollar yen, this is a pretty good one. 4-hour chart. I sort of illustrated this one last week. You've got potentially a trend line reversal strategy. This is one that I made a video on over at the How to Trade Calm YouTube channel. didn't really get anybody to watch it. No views to speak of, but these trend line reversals, they're big. You can study them online if you want, but essentially what we're talking about here is just our third area. So that right there, there's your 1 touch, there's your 2 touch, your 3 touch, and your 4 touch. Typically on the 3rd touch is when we're looking to make a decision. So maybe you don't want to count the first one as being an actual touch, but the beginning of the trend line. Okay, so there would be probably your 1 there, maybe your 1 in this area, 2. Those don't really touch. That one's close but no cigar. That one touched. So what we're looking for now potentially is a close beneath this level, beneath this trend line, which you can see you just draw it right up there. We're looking for a decisive close and then potentially a short trade, maybe somewhere right down in that zone. Stop loss would be up here. Profit target would be sort of down into the guts of this trend. But here's the thing. Your entry, it needs to be decisive. You need to see a bearish close that's significantly below that. If it closes right on that line, right on your trend line, you don't want that. You want to wait for that to be down here in bearish territory, and then you're looking to get in on that trend line reversal. On the dollar yen, I think it's possible that this trade has been brewing for a long, long time. So I think potentially we could get a little bit of action there. It's just got to develop. It's got to come our way, and it's got to set up. And if it doesn't, well, back to the drawing board, and we're wait some more. All right, everybody. I think that's a wrap for us today. Pretty good crude oil trade. We got in on it. Was it a difficult one to take? Yeah, but the beauty of it was cheap. So even if we lose that trade on a Monday, it's not the end of the world. It's not the end of the world. As far as a couple of the other fundamentals I do want to talk about, we're just going to touch on them briefly because we're about out of time for today. But Russia-Ukraine war, this one has been just absolutely exploding lately. No pun intended. I mean, it seems like the entire region's on fire. Moscow under attack as 400 Ukrainian drones hit Russian capital. This is big. You can see Russia pounds Kyiv as NATO military chief warns Moscow would lose a lot by attacking a NATO nation. Biggest ballistic missile attacks of the Ukraine war. This is big. This is really big. So when we're talking about Iran is definitely escalating. Let's just go ahead and refresh, see what the new headlines are. 3 U.S. troop kills, dozens wounded. U.S. teeters on all-out war with Iran. I mean, this really does look like the way we're going here. Not good situation. Definitely bullish for crude oil. Probably bearish for stocks, but we're not seeing them react just yet. As far as the Iranian, the prediction markets here, poly market, been fairly accurate about a lot of things. There's a couple of these markets that I'm watching, and I'm watching them closely. Will the U.S. invade Iran before 2027? This is changing. This is changing. Right here, you can see we sort of were down right around 13% on the 4th of July, and we spiked legitimately like above 30%, 32% over the weekend on these strikes. Now we're coming back down a little bit. However, 30% is a heck of a lot different than 13%, and we're only talking about 2 weeks. Well, 3 weeks. The memorandum of understanding is over in the region. War is back on and in full effect. There is a lot of talk. If the U.S. invades Iran, that's a major escalation. We will see the markets go absolutely crazy. In my view, it's the number one risk facing the financial markets in general. No question about it. Let's go ahead and I'll show you one other market, and then we're going to go ahead and sign off. Strait of Hormuz traffic returns to normal by July 31st. Not a chance. August 31st, only a 14% chance. It's not going to happen at this rate. September 30th, only a 25% chance that the strait reopens and returns to normal. How about by the end of the year? 55% chance. And even that, guys, even that has fallen precipitously throughout July from about 87% down to about 50-50. The longer that this goes on, the Strait of Hormuz remains closed, and the United States considers escalation, either ground troops or larger weapons. Believe it or not, they have larger weapons. If that escalates in that fashion, our financial markets go bonkers. Those are the two markets I'm watching closely. Prediction markets can be useful. Give us an idea of what the public's thinking. Big markets now, they're not as small as they used to be. They're relatively large. That's a big one. Strait of Hormuz traffic returns to normal in a U.S. ground invasion, no question about it. I haven't talked about ground invasion since April. Unfortunately, we're talking about it again. Okay, let's step back to our 30-minute chart here and see exactly what's developing on our S&P 500 futures. You're not going to get this trade, probably. You're not going to get it now. So I would still be looking to be a bidder there. Bottom area value right beneath 7,500, but it's not as good as it was about 29 minutes ago. It was a lot better, so I don't really love it right now. NASDAQ, I love that trade. That's a pretty darn good one. Let's go right to our 30-minute chart. Let's back it off. 30-minute chart, we've got a long-term Fibonacci there, and we've also got our point of control as we rotate, maybe back up above that value area. That's a pretty good level. I think that could be a very nice scalp as we go into the clubhouse today. All right, everybody, that's about a wrap. Remember, if you need a place to trade, head on over to switchmarkets.com. They will get you hooked up, set up with whatever you need. If you would like to talk to me or send me a private message, head on over to the howtotrade.com website. You can send me a PM, subscribe. It's a free subscription. You get a free account. You get to look at all of our Trading Academy videos, all of the learning materials in there are all yours. You can check out the live streams there as well if you'd like. You can also click on my picture and send me a PM, a private message. I answer each and every one of those. So if I miss you, send another one. That means that genuinely it got lost in the mail, but I answer everybody. And if you have a question about trading, be sure to ask it. And as always, join us for our live streams. We're here every day. This week, we're going to be at about this time every day. I may go early on Thursday, and we may do some high-impact scalping and see if we can hit a pip total profit target. The trading's been pretty good lately. I like trading this time of day, especially with those TPO charts. If I go live right there at the U.S. Open, we won't be able to trade the TPOs because you don't have really enough volumes. You don't have enough action yet to give us a good idea how to build our trades. So, like if you sleep in and you like what we do with the TPO charts here in the United States and you want to start trading maybe at noon or something, the TPO is probably the way to go, AKA the market profile. So you definitely want to do that. All right, guys, you're welcome, Bobby Bob and Ralph. Ralph H., good to see you guys in the How to Trade community. That's for sure. Great questions. Absolutely, Eli. Let's see. I got a few comments here. Which one do you like better is the question. Let me see, Jay. Which time frame do you think is best for the 9/21/55? Those are longer-term EMAs, Jay. So, for me, I'd probably be looking at like 4-hour charts for that. And those would be swing trades. Those would be position trades. That's for sure. Which one do you like better is the question. Eli, will the big red button be pressed? I don't even want to give my views and opinions, but I will tell you this: the big red button, they're not going to launch an all-out nuclear war. It's going to be tactical nuclear weapons for the first time in probably written history. I am concerned about it. In my lifetime, I've never seen us this close in the way people are talking about nuclear weapons. I've never seen it. Never. The fact that they're being considered by a lot of people. Will the big red button be pressed? Man, pray it isn't. Once the nuclear weapons drop, the entire world changes. No question. Let me see. Absolutely, Eli, you're welcome. Absolutely, Jay. All right, guys, I'm out. You guys have a fantastic trading session. I'm watching. As soon as we sign off, we're going to get this NASDAQ trade, it looks like, but I'm not going to sit here for another half hour hoping that it sets up. I don't like that. That's for sure. 4-hour, but if you like scalping, Jay, check out our workshop Wednesday, 5/8/13 EMA. We're going to use that on real short time frames, and you're going to have a chance potentially there to scalp. I would say that the 5/8/13 for scalping is better than the 9/21/55. That's my opinion. That's for sure. All right, guys, I'm out. Have a fantastic trading session. As always, trade the action well, and we'll talk soon. See you. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets, let's do this. When you're ready to trade, Switch Markets is waiting for you.